Warren Buffett often talks about this idea that maybe it would be better if the stock market closed and only opened once every 6 months. I, in the past month or so, would happen to agree with him. I just read an article about how there was literally an exact correlation between zero data expiry option execution occurring and massive swings in the market. And I've had enough of this. I've really had enough of this. It made January a brutal month for our firm. We're going to update our performance tomorrow. And it's not good. It's, you get you bring too many people in and then you slaughter them. It's like nobody wants this stress. We want to evaluate businesses, purchase businesses, invest in businesses, and adapt to the economic climate and interest rates. And if interest rates go up, we're more likely to lend money out because we're getting a better return. So let's take a look at the market through the Warren Buffett lens. And when I do that and acknowledge that we're not in the paradigm right now where everyone's trying to make a quick buck and just wants to get into the stock market, invest, and flip, and it's not necessarily thinking about what they're actually buying. We have to look at where things are going tomorrow. And I think when you do that, you don't necessarily want to buy stocks today because tomorrow doesn't look so good, particularly at this price. What is happening? Let's talk about the data we're seeing, and then we'll get to what's going to happen. We're seeing consumers drift into Walmart. That was pretty important thing. And you have to, you're not just thinking about that when you're evaluating Walmart. You're thinking about that when you're evaluating the entire economy. And I'm not saying necessarily recession is going to occur because of that. We had an earlier video where we actually said, recession or not, we're not trying to put a label on things. We're just looking at where the consumer is shifting. Netflix cutting prices. Okay, that's a very big, expensive stock. They're cutting prices. Yes, it is international, but that should probably trickle over here. Just like the $100,000 plus income consumer is trickling down into Walmart. Okay? Now, let's get back to the Fed. The Fed is talking about how there is policy lags, how the full effects of the tightening are yet to be felt. So we had this COVID boom. We had these few companies occupy a huge percent of the S&P 500 market cap. We've seen those companies begin to either stall out in terms of revenue or decline in terms of revenue. And I'm talking the biggest ones even. You look at Apple, you look at Google, you look at Amazon, you look at Microsoft. It's happening to them. That's the S&P 500 right there, pretty much, unless you want to look at energy. But nobody cares about energy. It's like 3% of the whole thing. At most, it might even be 2%. I don't know what it is, but it's very small. It's single digits and low single digits. And, Exxon made as much money as Microsoft last year, I believe. But Microsoft is worth more than all the energy companies combined, or something crazy like that. I mean, it's crazy out there. It's crazy out there. So the Fed says policy lags. They say the full effects of the tightening are yet to be felt. The full effects of the tightening are yet to be felt, but we're seeing earnings begin to flatten, and we're also seeing them begin to decline. And we're beginning to see consumers trade down, and we're beginning to see consumers go into things like Walmart. The good news is that's good for inflation. The consumer going into Walmart is good for inflation. The consumer cutting back on Netflix, Netflix cutting prices, all good for inflation. However, it's not necessarily good for stocks unless you're Walmart. And Walmart is one of the only stocks that does well in a recession. So, as we said in, I believe, yesterday's video, we think the environment is going to look a whole lot like a recession. Whether or not they put that label on it because unemployment hasn't gone up high enough or consumer spending is strong, I don't know. But when you see consumer spending have more than double the growth rate of consumer income, that is a worrying sign. That is not a good thing. That's not healthy. That is inflation. That is tight consumer. That's not what you want to see. What you want to see is consumer incomes go higher than consumer spending, because that means the consumer saved and their income is more than their spending. And when their income is more than their spending, they can spend more. Not when their income is less than their spending. When their income is less than their spending, it means their savings are starting to get depleted. They're not making as much money. They're spending a lot of money on necessary goods. It's not good, okay? I need to make this abundantly clear if I haven't done so already. While January might have been an exhilarating month, yields might have been falling, inflation might have been high, and spending might have been high, the future, in my opinion, is not so great, and we are still, even after the 5% or so pullback we've had, we are still very expensive, in my opinion, on the S&P 500 and in many companies. There are a few companies that make sense to buy. There are very peculiar names. We have videos about them. PBF, for example, in my opinion, trading at less than 2 times earnings. Very good company to buy. We're not having another refinery built in the United States. You can buy stocks, but you better be buying a stock that's cheap and that actually makes money. Because if it doesn't, you should go buy the 2-year or the 6-month and get paid to wait. And you will get paid a decent amount of money. You don't need to gamble in NVIDIA for your 5 or 10%. Because 1, you're gambling, you've got a risk. And 2, bonds are paying you to wait. So, evaluate your decisions in full, and we will see what happens. I would be patient in the stock market. Wait a few months. Don't buy stocks today. Don't buy stocks tomorrow. Don't worry about FOMO. Don't worry about a bear market rally. I'm tired of all these pundits saying seasonals, all these, in the first 5 days of the year, 7 times out of 8, the market does this. That's a whole lot of BS, okay? It's a whole lot of BS. We just dealt with the pandemic. You're going to give me some stats on how the market's going to do in a pandemic? No, you're not. It's a different environment. You're going to give me some stats on a massive inflation of the Fed balance sheet and then a massive contraction? You're going to give me some stats on the stock market performance when the Fed is tightening into a slowdown? It's crazy. Forget all that. Forget all that. The analogies based on just purely numbers and stock market performance and trying to extrapolate stock market performance based on historical stock market performance, based on stock market performance of a few days. That's all BS, all BS. What matters is you're buying an asset that produces cash flow and has its own assets, and you're determining whether or not that's actually a good deal for you. You're evaluating a business, and there's a lot of expensive businesses out there. You're literally getting ripped off, just like if you're to spend $80 on a chicken. Okay, you want to spend $80 on a chicken, I can make you the best chicken you've ever had for less than 10. Think about that. You want to buy that $80 chicken now? I don't think so. I can give you that recipe. Okay? $80 chicken, it's a lot. It's very expensive. It's very expensive when there's comparable goods. Nothing wrong with chicken. There's nothing wrong with NVIDIA. But it's expensive. And one last point. AT&T peaked in the dot-com bubble. Had a lot of similarities to NVIDIA. We're all extrapolating the future. But guess what? We give it the maximum valuation where it's going to be. Oh, yeah, the thesis was right. This company is going to be a major provider of cell phone internet service. And everyone's going to have cell phones. Everyone's going to have TVs. The theory was correct. What wasn't correct was the price. And that's why you haven't had a new AT&T all-time high since 1999. You don't want to be buying NVIDIA at that all-time high. So, that's today's video. And until next time, peace out.